in. But let me backtrack and share with you our thinking on African economies, the global economy, and what to watch out for, especially in the near term, as well as some of those structural factors that make us still very positive on the outlook for this region. First of all, how Africa compares globally. I've just put up our forecasts here. Dark green in this case is very good. It means a higher growth rate. And the one key takeaway is that not only are we seeing still strong growth in China, of course, the growth returning in places like India, but a lot of Africa, despite current challenges, still being covered in that dark green color. The growth momentum, trend growth, has accelerated since the end of the global crisis. We know, for those of us who watch South Africa closely, that in that economy, the news has not been particularly positive. But on a weighted GDP basis, with Nigeria now much bigger, that matters less for the overall African average. And even given some of the recent news that we've had from West Africa, the smaller economies hard hit by Ebola, no one is thinking that that is going to be enough to fundamentally overturn this positive picture that is still emerging. So for 2014 as a whole, it's not just Africa. For much of the world, we are seeing a more positive picture. And of course, what this does mean, in the case of the US, is that we can expect at some point not only to see the removal of the policy accommodation that has been put in place so far, but actual tightening. This, of course, is offset by a weaker picture in the euro area, still a lot of liquidity being added in Japan. It's not clear that we're going to see those dramatic tightening conditions that everyone had been so apprehensive about for so long. In terms of Africa, we know that there's been a great deal of external issuance, a lot of the pricing of that very generous, perhaps some thinking needed about valuations and whether they can withstand the test of a less easy liquidity environment globally. What we do know is that given the totality of global influences, we're probably not going to be facing that just yet. So what does all of this mean for Africa? Here is where we go a little bit more big picture. How should we think of where we are right now in the bigger scheme of things? And what we've done here is a very simple illustration of the ranking of African economies by their size using IMF figures, and we've taken the dollar figure in this case. So we know there's a lot of controversy. In an ideal world, we would have really robust PPP methodologies, and we could rely on that, purchasing power parity. But let's just be a little bit more straightforward, and if we were to take a pure dollar view of how economies have evolved over time. Now, what are the standouts from that particular ranking? The first, which I hope will be very evident, is that it's really the bigger economies that have stayed, have tended to remain the big economies in sub-Saharan Africa for some time. So is this idea of solo convergence? Do the small economies grow much faster and catch up? Not necessarily. There is a suggestion that certain fundamental advantages at the outset, a large population, a certain amount of resource wealth, will pretty much ensure that those economies that are already sizable become even more sizable over time. Where do we see the difference? If we're thinking of an economy like Botswana, we know that in per capita terms, for many decades after independence, not so much now, but it was growing very rapidly. It grew faster than the Asian tigers. But even that kind of a growth rate was not enough to take a small country and to put it in the sub-Saharan African top 10 ranking. But if we were to fast forward to 2020, there is actually another relatively small economy now that we think could join that ranking of the top 10, and that is Mozambique. The scale of the resource find that has been discovered suggests we will be seeing very significant growth, despite the fact that it's a small economy. What other takeaways? There is this departure, if you like, between Anglophone African economies and Francophone economies, especially in recent years when perhaps credit growth has become a much more important driver of GDP. That tells us something about the importance of financial market depth, perhaps. You can't take it away entirely from the problems that were experienced in Côte d'Ivoire for much of the last decade and a little bit more than that. And hopefully now we are going to see some turnaround. But it's clear that that disparity has increased. The key question is, which are the markets that everyone should be focusing on? What are the drivers of this growth going to be? So moving very quickly along, we all know it's become cliched now. Any of you who think that commodities have been driving African growth, please leave the room. It's really been a story about consumption, the rise of the African consumer. Recently, academic studies have been published. They look very interestingly at the value added in Africa. Where has the growth come from? It's been about people moving away from low value added activities in agriculture and the creation of new jobs, a bit of that in manufacturing, maybe not enough, much more in the way of services. It is this strong trend that we can associate with urbanization, with rising incomes, with the extension of credit to a larger number of consumers that is fueling the growth in Africa. Of course, we will have to watch its trajectory very carefully to observe what risks lie along the way. There is no getting away from the demographic argument. So many people are looking at Africa, and of course, many of you representing pension funds in the region know this all too well. So many people are looking at Africa with greater optimism because of the demographics. We all know the Nigeria story, 7th most populous country in the world, the most populous in Africa. By 2035, it could be the 4th most populous country globally, and as early as 2055, perhaps, coming only after India, which will be the largest by then, China, and then Nigeria in terms of population size. That's dramatic. It grabs the attention of a lot of people. It doesn't matter too much if you're looking at average per capita incomes. We know those went up $1,000 per person this year with the rebasing, or median per capita incomes, where perhaps the story is a little bit more concerning. But the fact that you've got a lot more people suggests that there's going to be at least that much more consumption, even holding other factors equal. But it's not just a Nigeria story. Fast forward to 2100, and you'll find, according to the UN's projections, I didn't make up these numbers, a lot of demographers who know a lot more about this than I do, did come up with the numbers, and in fact, they think they're underestimating the pace of growth of Africa's population. Their finding suggests that by 2100, roughly half of the world's 20 most populous countries will come from sub-Saharan Africa. I mean, even Zambia, currently with a population of what, 13, 14 million, makes it on that list. Why do they think they're actually underestimating the impact of Africa's population growth? Because so far, despite the economic growth that we've seen in Africa, there just hasn't been a fertility transition of the kind that we would normally associate with developing countries. We've seen it elsewhere, we haven't seen it in Africa. Even so, these UN figures do assume that at some point we're going to see more of a fertility transition. And if we don't, then the situation might be even more pronounced. What this suggests is Africa is going to be important as a market. The individual countries, especially if they can come together, are going to be important as markets too. It's not just about the total number of people, it's about the demographic profile too. This is the key point. If you look at the working age share of the total population, in sub-Saharan Africa, it is expected to start rising very strongly. Where have we seen this before in the recent past? We saw it in Asia. If you look at the Asia line earlier on, it coincided very nicely with that time when Asian economies really started to outperform. And so the expectation is that just because you're going to see this changing demographic structure, more people making up a part of that economically active segment of the population, that's going to be driving more robust growth. We all know that younger economies look very different to aging societies. In aging societies, you've got to save a lot more. Asset prices tend to be driven up because of those savings. The returns on assets, the returns on investment tend to be driven down. In countries, in economies that are demographically different, the starting point, your premise about your investment, is different too. Here, you've got a lot more of a working age structure to the population. Consumption is going to be stronger. Other things being equal, returns on investment relative to those aging societies should be higher. For any of you investment managers, if you're looking at where the returns should be available based on longer-term demographic trends, Africa's not a bad place to start looking. Now, it isn't just about the number of people and the demographic structure. We know that Africa's been growing for some time, but there is something else that is accelerating the pace of change in the region, and that is this urbanization trend. It's about moving from the low value-added activities that barely make an impact on anyone's radar screen towards doing something more economically useful, where the impact is suddenly more measurable, it can be seen. If we're looking at which region is going to see a larger share in terms of the increase in its urban population, Africa, again, is a standout relative to other parts of the world. So, even leaving aside everything that you already knew about Africa, if you do focus on some of these longer-term structural trends, there's a lot to be positive about. What's changing now? We're finally seeing governments taking action to compensate for that decades-long underinvestment in infrastructure. The urbanization is allowing for the economies of agglomeration. Suddenly you're not looking at vast swaths of land that are very sparsely populated. When people come to different cities, you tend to see that the cost of infrastructure provision per capita starts to go down. Think of it as a positive supply-side shock that can propel growth into an even faster range. Of course, it's not all good news. We've spoken a lot about moving away from the low value added in agriculture to higher value added activities. But if Africa doesn't get this right, then given that demographic profile, we're looking at a very different future. The data that we've got so far, it is only available with a lag, suggests that agricultural productivity in Africa just hasn't seen the same sort of increase that other regions have seen. We've seen green revolutions elsewhere. We know that China, you can make out the line, it's pretty faint, but it's been able to lift many millions of people out of poverty simply because of the improvement in agricultural productivity. So, what makes us more positive on Africa? Forget the official statistics. We have started to track things like food prices in Nigeria much more closely on an independent basis. And there is strong evidence that food prices are coming down in a way that can only be consistent with some sort of improvement in agricultural productivity. We see it elsewhere too. As a bank, 20 years ago, there were very few commercial agricultural projects that were bankable. That is changing. Governments are paying more than just lip service to the idea of agri-sector productivity in Africa and doing something about it. But we shouldn't forget the immense potential of this sector either. If we're looking at the land available in Africa, only 14% of the potentially available cultivable land is put to use. And that means, on a global level, looking at food security, roughly 60% of the available farmland globally is to be found in sub-Saharan Africa. And more myth-busting, for those of you who tend to think of Africa in stereotypical terms, very hot and dry, actually, in per capita terms, it's richer in water resources than either Asia or the Middle East. Unsurprisingly, this is leading to a lot of investment, a lot of incremental investment in African land. We still think this is a sector that needs to be watched closely. Keeping to the time that we've got, financial intermediation, the big game changer for Africa. How was it that we started to see African consumption picking up? We saw in the last decade, in real terms, the amount of private sector credit to GDP doubling. That is a phenomenal rise, but we think it's just the beginning, driven, of course, by what we've all heard about, the rise of mobile telephony in Africa, the use of that technology for different uses. That we don't need to talk about. I'm sure the whole room knows that there are more mobile phone subscribers in Africa than there are in Europe. But we do need to look very closely at the countries that have been more successful in this respect, such as Kenya. The truth is, we do not see the Kenyan experience replicated across the rest of Africa. There's a lot of hype about it, and Kenya is the world's leader in mobile money, but that doesn't necessarily mean we're going to see the same rate of financial access, the same rate of financial inclusiveness in the rest of Africa. What was different? In Kenya, some pretty unique features. There was a mobile phone operator that had a fairly dominant market position, which meant that when it came to the development of mobile money, it was that much easier. That isn't necessarily the case in the rest of Africa. More importantly, perhaps, the regulator in Kenya allowed for mobile companies to take on some of the functions of financial intermediaries. Do we see that elsewhere? Not necessarily. The Kenyan successes are well known, the lowest rate of financial exclusion anywhere in Africa, but we do need to pay attention to the qualities, what led to that success, and ask whether it's being replicated elsewhere. Finally, or towards the end, let's take a look at Asia again. In Asia, we know that we saw this strong, robust growth experience built on a very high investment rate, backed up by a strong savings ratio. In Africa, prior to the crisis, it looked as though African economies were generally moving in the right direction. Savings ratios were picking up, investment ratios were picking up. And then came the fiscal deficits, the counter-cyclical response with the crisis, and we started to see wider deficits. The savings ratio in Africa has actually started to trend down again from not very high levels to begin with. And if we're looking at the trend towards rebasing, that means as a percentage of GDP, it's likely to be even lower. But the investment ratio has been sustained at a higher level and seems to be moving higher. Of course, this brings about risk. This is where you get the current account deficits from, this investment savings imbalance which can't be sustained indefinitely beyond the very short term. Should we be pessimistic? Africa looks very different to Asia. Or is there room for optimism? We think, looking at Asia's experience, that it was only after Asian economies started to grow very strongly that we started to see that savings rate rising to higher levels. So maybe Africa is at a much earlier stage, and it could still happen, but it won't happen automatically. It does need a conducive policy environment. The other point is, up until the Asian crisis, we were seeing Asia's investment rate generally a lot higher than the savings rate. The crisis, of course, changed a lot. That doesn't necessarily mean that Africa can't catch up at some point and demonstrate a similar feature. China, Africa, we've heard a lot about it. Hopefully this graphic representation helps to drive home just how meaningful that has been. Trade in the mid-1990s, barely $4 to $5 billion. Fast forward to 2005, it rises to $40 billion. The latest full-year data that we have for 2013, trade between China and Africa balloons to $210 billion. It has been dramatic. And China has single-handedly helped to overturn the chronic undervaluation of African assets. Many people the world over are looking at Africa differently because of what they see as China's impact. Now, we know that China's economy is slowing down to perhaps a more sustainable pace of growth, 7 to 7.5%. What does that mean for Africa? So far, trade growth with Africa has remained positive. That hasn't been the case for all regions. We also think we need to keep this in perspective. Even China, trying to dampen down investment, is still a China that is growing at a pace of growth that will allow it to effectively double in size every 10 years. If China slows down to 7%, that means the world economy still gets a whole new China every decade. That is huge. It's very difficult to be overly worried about the implications for Africa with that kind of growth. But perhaps another point, it isn't just about the weakness of commodity prices. The last decade may have been one in which some African sovereigns were able to benefit from a more robust commodity price environment. But if we look around us, in most instances, there are one or two exceptions, but in most cases, the next decade is going to be a story about rising commodity output. It tells a more positive picture on Africa. Maybe we should bring this to a close, though, because we've got a robust panel discussion still waiting for you. Global factors. We know that we've seen record amounts of debt issuance in Africa. Last year, we seem to be on track easily to be beating that this year. Valuations are still very favorable. It's cheaper than it's been ever, in a sense, for African sovereigns to keep issuing, and even those where we start to have question marks about the credit quality still seem to have that market access, are still surprising with the kind of rates at which they're able to borrow at internationally. For as long as that's the case, that's good news. The infrastructure spending in Africa can continue, the growth continues, the appetite is there. The question we need to ask, and maybe the panel can talk about this, is how much does some tightening of global liquidity eventually change that? It's true that in terms of other forms of financing for Africa, less dependent on leverage, less dependent on the state of the world today, the more long-term flows, those are looking robust as well. But this is going to be a key test. And finally, we should never end any presentation on Africa without considering the real political risk facing individual countries. This is where we can't talk of Africa as a single country. It's very diverse, we know that, both in terms of economic influences and political influences. But a key underpinning of the good news about African markets and the optimism surrounding African markets has been this belief that governance was improving, that the political environment was calmer, that we were seeing an easy embrace of multi-partyism, that things were generally progressing. Another question: how much can we take that for granted, and what is it actually going to mean for the growth outlook? So I tried not to answer all the questions in the presentation. I think we can now take it over to Bridget and our panel. Thank you.